All right, good evening. Here's the Hit It Monkey market update. Sorry, a little late. I was actually had to type all this stuff out, and I think I'm gonna try putting it in writing, but it's a little bit much. So I like this little short videos, and I'll keep it brief. Um, okay, today is a great follow through day for us people who love to sell premium and golden geckos. Let's take a look at what happened today. Um, we'll go to the charts here. Here's the S&P, the SPY, the SP 500. Let's take a look. It was a good day. It was down over 0.5%. Okay, so this nice red bar still going great. If we zoom in a little bit, we can see the Bollinger Band getting a little starting to expand, which is what we want. The good news is IV rank popped. See that? It's now at about 40. It's over 40% IV rank, and the best part is on balance volume dropped again below, and it's nice and red. This broke below 80. This is a really good sign. So what I'm looking for tomorrow is I didn't put on any trades today. I would have posted it as I do because I'm preserving my capital because I want to go. I want to really take advantage if this happens again like I did at the end of July. Okay, so when IB rank pops above 50, remember now what Canada Super Trader does, and in a higher IB rank environment, she'll pretend the market, and remember now she sells SPX, so it's a lot larger contracts, but when the volatility was high, like not last year, but 2012, she would be pretending the market had already dropped 100%. Then she goes another 12% below that, and that's where she starts selling her puts. Okay, so to take advantage of any vol collapse. So what I'm looking to put on, a good sized trades. I just want to take advantage of this IV, of this popping volatility, and we can even skew the golden gecko downwards towards the bearish side, especially if we see this. Okay, and this goes red, then you can skew it to the bearish side, and I'll show you what I mean by that in a minute. Okay, now let's take a look at what the ES is doing, because of course that trades pretty much almost 24 hours, not quite, but almost 7 days a week. But anyway, so this tick is Tuesday. This tick right here is after hours. It already started. All right, so it is, the futures are even going lower. All right, but what I don't like is, shoot, it's leveling off, and I think that just could be after hours. Hopefully tomorrow morning this drops and it goes below here, and this turns red, and IV rank should be spiking. I don't know why it's taking so long to load, but anyways, and we want IV rank to pop up higher. Now, hopefully that happens tomorrow. Okay, just like it did at the end of July. See right there, July 31st. Here's what we want. We want this to go red, this to go red, and then I'm going to start putting on my golden geckos to probably skew to the bearish side a little bit. And I'll show you what that means again. Because remember now, we want to stay in this range for about 56 days. So in about 56 days, we want to kind of still be around, where we started. So let's say that happens tomorrow. That means in about 56 days, which it'll be probably the November expiration, we want to end up around the same place while collecting all that premium. Okay. So that's what I'm looking at for tomorrow. Some other things is that's my major core position, and of course you can trade around it, but I like to stay with ETS versus stocks, because I don't have to worry about earnings or whatever. They're less risky. If you listen to Karen the Super Trader, that's how she started, and that's what got her into strictly doing the SPX, is to avoid those to limit those black swan events for her. Let's go to Dole real quick, and I'll show you what I mean. Okay, Dole. What I did was, here's some other options for you. These are notable stocks without earnings, IV rank of 50 or greater, and I sorted it by IV rank decreasing, okay, from highest to lowest. So just go to Dole, go to your notable stocks here, okay, select notable, you open your filter here, okay, click on hide earnings, and select this to 50, and then click on volatility to sort in descending order. Okay, so again, if IV rank pops more tomorrow and the market drops down, which is why IV rank would pop, my main position I'm going to be putting on an SPY. But if you have more capital and let's say you want to put on more trades, here's some other options for you. You could do again, remember, don't forget EWZ, hold off until like October 4th or maybe even October 5th, but you can do it on October 4th and then give yourself, 30 days after that, because the elections are going on in Brazil. Elections are held October 5th. I do not see IV rank going anywhere until then. So put on your Golden Gecko on the 4th, October 4th, and you can probably collect more money for it as well. XOP. Okay, right here, you could sell a Golden Gecko. You could do a Golden Gecko and XOP. I think you can collect around 98 cents when I checked it. VXX you could do as well. You can collect around 71 cents. USO, I checked it out. You could do one for about 32 cents. It's a little bit on the low side. I'll cover a different option on that as well. XLE, you can collect 92 cents on a Golden Gecko. FXE, you can collect around 50 cents. This is after hours. It might change tomorrow morning, but you could place good. You could queue them and then see what they're trading at tomorrow. Okay. I didn't really map out VIX or FXY, but of course you could check on that as well. I'll do it real quick on FXY for our new listeners. What we do on a Golden Gecko is you just double click in the middle here. That's your IV rank. It'll open up your trade page. Okay. Here we go. And you're going to go to choose strategy. You're going to go to Iron Condor. You are going to make sure your star is set on normal Iron Condor's default. You want your expiration to be 45 to 56 days. You want to make sure you select monthly. You want to make sure you click one SD. So this says 84% out of the money, which is one standard deviation. Total width, set for 5 for now, and make that your default. Click on go. And here's what we're going to check out in FXY. So what we're going to do is we're going to move in these green, the buy strikes, which are the wings. Okay, and we want to move those inwards so they line up to this 2 standard deviation line right here. So follow along right there as close as we can. Okay, move this in right here, close as we can. That's good. No, I'll put it back out. I'll zoom in a little bit so we can see. Oh, that's too much. Shoot. Oh, okay. So as we can see, our probability of not losing money is 80%. It's almost 80%, 79%. We're going to collect 30 cents. That's not enough to collect. That's on the low side. So we want to collect more than that. And if you want to double check, go to choose strategy. Choose strategy again. Go to strangle. Hit and make sure these are your settings. I can change this to 56 days if you want, so we keep the same stuff. Click on go. Okay, on a strangle, it says here we can collect 40 cents. We need to be able, if we do a strangle, we need to collect at least 19.8% of that. Quickly go to Thinkorswim, and that was, what was that, FXY, right? I'll type in FXY here. Go to your trade page, which is gonna be, yikes, how do I get there from here? Here we go, trade page. We are gonna, actually this is, well, let's just look. We're gonna click on here, and we can see it has a probability or it has a expected move of $2.41. Go to here, your calculator, take $2.41 and multiply that by 19.8% or 19.8, and we want to click at least 47 cents. See, so we're not quite there yet. So this is a trade I'd probably hold off on. Okay, that's all right. You can, but at least I want you to go through the mechanics. If you would be able to collect enough, if that was 47 cents, that means you can collect 20% of it. All you do is go back here, go back to Iron Condor, which is your Golden Gecko, hit go, move your strikes back into the 2 standard deviation amount right around here, and whatever price that is right there at the mid, that's good. You can collect that and place your order there. Okay. Now, what did I mean about maybe being bearish if the S&P 500 pops tomorrow or the SPY pops tomorrow? Okay, here's what I mean. You could skew it a little bit bearish because you don't know if this market is going to make a huge correction or not, and you want to pad yourself on the low side. Okay, so what you could do is you go to Dole, go to your trade page, click on SPY. You're gonna go to choose strategy, iron condor. Right here we go. 50. All this stays the same. That's the great thing about Dole. It memorizes everything for you, so it's really easy for you to put on. All right, so here's what I mean about skewing it bearish. So let me zoom in one click here, and I'm gonna move. Again. Don't forget, move your buy strikes to roughly the 2 standard deviation line like this. Again, the 2 standard deviation line is right here. Okay, and of course your golden gecko strikes will always be automatically around 84 to 85%. Okay, so to recap, what you're betting on is you're betting that the SMPY at the end of 56 days or 59 days will be between 186 and 211. Right now it's at 198. But what do you think? But Mark, based on the chart, this thing could drop, and who knows, right? So what if let's skew it, meaning let's kind of favor the downside. How do you do that? Once your trade is set up, go to where it says strikes and click maybe once to the left and watch what happens. See how everything shifts over? Okay? And you go, well, Mark, let's do it one more time, and then we'll leave it from there because I'm thinking it'll be like a pretty heavy drop. Okay, perfect. Okay? Now adjust your green strikes again. Your green can always be around the 2 standard deviation line. Okay? Your buy strikes. There you go. So look, we can collect 88 cents, okay, per contract. And what you did was you moved your risk on the downside, meaning if the market drops. So what this means, as long as the market stays above 184, and I'll double click here so you can see, here's your probabilities on each side. You have an 88% chance of being right here, and you have an 81% chance of being right here, and you're still collecting 88 cents. All right? So if you want to know the math, here it is. You make your max profit of $88 per contract if the SPY winds up greater than $183.12 and less than $209.88. Okay? So this is a way you can take advantage of that trade based on if SPY pops up tomorrow, if you want to skew it that way. Or you can just do a regular golden gecko. Let's see what 20% of that is, and I have about 1 more minute left. Let's do it real quick. Go to strangle. We want to click $1.55, so let's go to the SPY here. Your tab would be kind of go to your trade tab, and we want to see, here we go, $9.85, 9.855, 9.855 times by 0.198 equals, we want to click, $1.95. We can't do it, right? Okay, so this is why we're not clicking 20%. You gotta make a decision on what you want to do. All right, we're supposed to collect at least $1.95. Right now we're only collecting $1.55. So here's what I'm gonna do. See, when you can still make the trade, I am, especially if volatility pops tomorrow. So what I'm gonna do is I'm gonna wait to see if IB rank pops tomorrow, so I can, when IB rank pops like this, hold on, when IB rank goes high, the premium in the underlying goes higher. So these bid and ask, the bid and ask over here, you can collect more. So hopefully that's what I'm looking for tomorrow. Okay. Oh wait, real quick, one quick thing I was gonna do. Remember we talked about USO? I got 30 seconds. Look for trading USO, and look to go long USO and short like an airline stock like United Airlines. That has been, they're usually inversely correlated. Okay, so for example, you could, in USO, you could sell a vertical put spread, the 28 5 strike and the 33 strike, and you could sell a call spread in United Airlines for the 55 and 65 strike. You can collect about $1.24 in that. Okay, so hope that helps. Have a good night.